All right, I think we are live. Let's see if that works. Yes, I can see us online. Hello, Parker. How are you? How are you doing?
Doing well. Good to see you again. I think
Yes,
last time we saw each other was in Prague.
yes, indeed. As I mentioned in the post, it's a big honor for me to have you with us today. As I mentioned to you, the Gradually Then Suddenly series you did back in the time with Peter McCormack and What Bitcoin Did uh, was the final click for me to fully understand Bitcoin. I already was in Bitcoin, but like to fully understand it and Bitcoin become a Bitcoin maximalist and make the final decision to focus all of my time and energy to work for Bitcoin and to produce a lot of value for the Bitcoin network overall as much as I can. So thank you, Parker. It's just a great honor and the objective today is for people to take a step back and understand a bit more Bitcoin itself, maybe have a view of your own, how you discovered Bitcoin yourself, and have a discussion about Bitcoin, the store of value, payments. You are building Zaprite, and I think there are a lot of great things to know about your endeavors there. And yeah, have your views on many topics and maybe get back to why Bitcoin is the only winner in the monetary space. All of this. So maybe to start, could you please give us a view on how did you enter Bitcoin and what's your Bitcoin history?
Sure. Well, first, I just want to thank you for having me on, and it's a pleasure. I appreciate you saying that about the series that I had done with Peter McCormack. I don't know if that was 2019 or 2020, sometime in there, but it's a it's important to hear those things that people value the work that you put out and that it has an impact. And now I love that you're paying it forward and working on Bitcoin and also helping to educate people. So appreciate what you do, and it really was a great pleasure to meet you last year in Prague. So thanks for everything that you do. And then in terms of my story into Bitcoin, um, I it would have been 2016 time frame. I was going down two different rabbit holes. One was trying to understand. I was working for a hedge fund at the time in Dallas, Texas, run by an investor and founder of Human Capital named Kyle Bass. And I was trying to understand what would happen when the Federal Reserve started to unwind post 2009 financial crisis quantitative easing. It was around the time where the Fed had started to signal that it would begin those efforts sometime on the near horizon. And through that process, I came to the conclusion that they would always have to print money in that it wasn't a probability or a possibility, it was a certainty, and that it had to do with the degree of leverage in the financial system, the amount of dollar debt to the number of actual dollars that existed. But it was a mathematical certainty that they wouldn't ever be able to unwind the financial crisis liquidity that they had put in, and they would always have to put in more. And around that same time, I was asked to go do diligence on a gold company based in Canada, or I should say a payments company that was endeavoring to build a gold-backed payments platform. And serendipitously through that process, I got to meet Safety Namus, who would later write the Bitcoin standard. And Safe really helped me understand the foundations of money, what caused. I think the right word is caused certain monies to emerge on the market, and also caused other monetary goods to demonetize. And through developing a friendship with Safe and through Safe helping to educate me on those principles, then within that next 12 months, he had started writing the Bitcoin standard. And the combination of those things helped me start to understand why Bitcoin had fundamental value in the world, and that its fundamental value in the world was around its fixed supply, and that it represented the foundation of a form of money that couldn't be printed. And that was when I connected the two paths of research, that on the one hand, figuring out why the Federal Reserve and central banks all over the world were going to have to print money, and that Bitcoin was the solution to the problem of printing money, and that the printing money was a problem that everyone functionally in the world suffered, and that everyone would need a solution to. And that was when I decided to, endeavor myself to work on Bitcoin in some form or fashion, and then ultimately that ended up me joining Unchained to work on Bitcoin custody first, and then ultimately write the Gradually Then Suddenly series, which I turned into a book, and now working on Bitcoin payments. So that's my origin into Bitcoin.
You've written the Gradually Then Suddenly series, of course, and where do you think we are in this array of adoption between the gradually and the suddenly part?
I think we're still in the gradually phase. I think one thing that I would say is that when suddenly is happening, you won't need to ask the question. Bitcoin will be rapidly monetizing, and in my view, the world, not because it would be caused by Bitcoin, but that fiat currencies of developed countries would be hyperinflating.
And one of the core elements of your analysis is that basically there is a rational decision making where a form of winner takes all in terms of monetary dominance, and where Bitcoin, given all the properties that you've described, can have a strong stance there. Where do you see are the key elements in terms of the adoption? And there I relate a bit to the store of value and versus payment aspect. I do see those as absolutely necessary and complementary. But since I see that you went from Unchained to now working on payments, it seems like you are also contributing in a new way to Bitcoin adoption, and at the end of the day as well the store value through the payment as well. So what are your thoughts on this debate?
Yeah, let me first touch on the idea that you mentioned first, of this idea that there's a winner takes all in the context of money. And there's a quote in the Bitcoin Standard from Safety Namus where he describes how an economy can grow as large as there are a group of people willing to accept the same form of money or the same medium of exchange. And that, another way, or the way that I have framed that for myself, and the way that I describe that, is that money in economic systems naturally converge on a single form of money, and that it's not random, and that it happens for objective reasons, and that at the core of that reason, it's that money solves the problem of trade, and trade is an inherently intersubjective problem, that in order for two people to trade with the same form of money, that there needs to be a consensus in what that money is. I have to have the form of money that you're willing to accept, and neither of us arrive at the conclusion of what money is randomly. That there are objective set of criteria that make certain goods better or worse than other forms of money. But if you and I are to trade, that part of your evaluation, this is the intersubjective part, is you're evaluating what you believe to be an objectively better form of money based on different criteria. But part of that criteria is what other people will also value in exchange. And that same problem that's 1-to-1 is 1-to-1-to-1, and it's ultimately 8 billion to 1. And that even if you look at the world and there's 200 currencies, they all virtually emerged off of one form of money that preceded it being gold. Um, Certain currencies went on silver standards, but by and large, gold existing is evidence of the world previously converging on one form of money. The dollar is another. If you look at cross-border dollar activity versus any other second closest, that it's a long tail. And in the context of Bitcoin, Bitcoin is global and permissionless. It is valuable as money because it can credibly enforce its fixed supply without the need of trust, without anybody being in control. And it differentiates itself from those fiat jurisdictional currencies because there's no one to enforce a jurisdictional gate effectively. And so it can be adopted by anybody in the world. And so it doesn't mean that there isn't going to be some long tail where cigarettes are used as money in prison, or certain local economies in very small fashion have something else alongside Bitcoin to trade. But by and large, virtually all of the world's economic activity is going to shift to Bitcoin indirect commerce. And to simplify that, it's Bitcoin represents a form of money that can't be printed, and if money converges to one, then everyone's going to consciously or subconsciously be seeking out the best form of money. Now, when it comes to this idea of Bitcoin being a store of value versus a payments currency, the way that I would frame it is that it's both. It's both at all times for all people. If somebody is and then another way that I would frame that from the outset is that the very logical order for anybody's path to Bitcoin, first you have to understand why Bitcoin will store value in order to save any percentage of your savings or wealth in Bitcoin. And that the easiest and most logical way to do that first is to convert some amount of fiat into some amount of Bitcoin. But once that idea is hardened in your mind, and if you are out in the market selling a good or service, then it becomes hyper logical for you to just accept Bitcoin directly if you have customers willing to pay you in Bitcoin. And that the shift to Bitcoin payments will logically be driven by people who are offering goods and services that understand why Bitcoin is the better form of money and deliver enough value to the market that they have customers that will be willing to pay them in Bitcoin. And because the other scenario is that you accept fiat, you incur the cost of the fiat system only to then convert it to Bitcoin. It becomes the less efficient path to getting Bitcoin. The other thing that I would say just from an economic principle or reality is that even if somebody is saving in Bitcoin and using it in their mind as a store of value, what is implied in that is some future exchangeability. That could be back to another fiat currency to then interact with the real economy, or it could be using that Bitcoin at some point in the distant future, even if they're not contemplating it now, to purchase a good or service. That the ability of money, of any good that's ever emerged as money, to store value is predicated on its ability to be easily exchanged. Not all goods that act as stores of value are viable as money, but the ones that were viable as money necessarily possess properties that made ease of exchange possible. Otherwise, they wouldn't have emerged as money. And so the time horizon could be very long. Someone could never be intending to spend their Bitcoin or to convert their Bitcoin, but the way that it derives value is through future exchange. Even if that's passing it down to your heirs, the value to them is future exchange. And that the more easily Bitcoin becomes exchanged, the better it stores value. So if there were a world where you could only convert Bitcoin back into fiat currencies versus if you could convert Bitcoin into any good or service, including fiat, it's more valuable and it's more liquid. The diversity of liquidity is greater. The quality of the money is greater. And its ability to store value in the world where you have thousands of counterparties to exchange it with versus single digits is greater and greater. And so it's also, in my mind, just the logical conclusion because everybody is on the same curve, even if they haven't even adopted Bitcoin yet as a store of value.
Just I think there is a small noise, like something is close to the microphone, maybe. I don't know. So maybe if like the computer can be a bit, I don't know.
Maybe is it better now?
Not sure. Um,
There's a noise kind of up above me that I
okay.
can't do a lot about.
It's okay. I can hear you, so it's all good. So I think we can continue like this. Based on this, what has motivated your change from Unchained to Zaprite, and how have you decided to go all in on the payment side and to focus your energy on this aspect specifically?
Yeah, the short answer, and then I can dive into it more if you'd like, is that I was looking for when I was publishing my book, I was looking for a way to accept Bitcoin directly, and the solution that I thought should exist didn't exist, and Zaprite was closest to that, and that set off conversations with the founder and CEO John McGill of Zaprite, along with my good friend and colleague Will Cole. The other thing that more broadly caused me to focus on Bitcoin payments was it was around the time where there were a slew of bank failures in the United States. Silicon Valley Bank, First Republic, a few others, Silvergate Bank, Signature Bank, but it was really Silvergate that collapsed very quickly, functionally overnight, and it reinforced for me something that I already knew but had become less front and center was the instability of the banking system. And the thought that continued to echo in my mind was, what would you build if reliable access to the US banking system was no longer a given? And in my mind, the least developed aspect of Bitcoin was Bitcoin payments. And a lot of the businesses that banked with Silicon Valley Bank, of which there were a lot, their first logical question was, how do I make payroll on Monday if this bank is not bailed out? But the second question, which was less front and center, but which is just as important, is how do I access my customers? How do I receive revenue from my customers? Because banks are the ultimate rails of the fiat system. And if you lose access to your bank, then and the bank is the way that you receive revenue, you have a cash flow problem. So they're both, and it kind of comes back to this idea that the ability to store value and the ability to exchange are very tightly wed to each other. Both are important and both need to be advanced, and Bitcoin payments are probably, and still to this day, even though strides are made every single day, the least developed aspect of Bitcoin.
What have you observed since the initial phase of Zaprite, and what do you see in terms of the state of payments in Bitcoin? Has that evolved over the last year or so? Do you see any differences, the challenges, or on the other side, like very impressive steps that are being taken?
Yeah, sure. I mean, I think that probably the greatest thing that has changed is the number of standard businesses that are not Bitcoin adjacent inquiring about Bitcoin payments. It feels like we're in a different category today than 2 years ago. The other thing I would say is, and again, this is to a smaller degree, but in the past, I'd say in terms of large platforms, other commerce platforms, there was virtually zero interest in Bitcoin payments. Now, seeing somebody like Square announced that they are going to be enabling payments at their terminal. I think that's a huge watershed moment. That's going to pull a lot of other platforms along with them. And then there's other e-commerce platforms that wouldn't have entertained a conversation 2 years ago that are now, reaching out to us inbound to have discussions. So I think that, and then again, one of the challenges of Bitcoin payments is that Bitcoin payments need to reach businesses where they are in order for adoption to be easy. And what I mean by that is if a business, particularly a complicated business that has a lot of customers and a lot of needs and a lot of people that interact with workflows around money, if those businesses require second processes to be able to accept Bitcoin, they won't. They will otherwise just have the single fiat rail or the multiple but contained fiat rails and won't adopt Bitcoin payments, even those that want them. And there's a reality that businesses are so different, even businesses in the same category in terms of what their tech stacks are, that there's a critical mass. There's clearly a critical mass of businesses that want to accept Bitcoin payments, but there are a lot of different needs, and it's difficult to meet all those businesses directly where they're at. And so the more that platforms become interested in Bitcoin payments, that will massively accelerate the adoption of Bitcoin payments. And it feels like we're on the precipice of that. Like not by any means, there's not escape velocity, but it's building toward a critical mass.
You told me that you have a background in finance, and I think, and of course we participate, there is a trend in terms of the adoption of Bitcoin by corporations and the infiltration of capital markets. And with this, a lot of new joiners to Bitcoin have come to know Bitcoin through the Bitcoin treasury company's lens. And in this sense, even, and many of them have even started to buy Bitcoin treasury companies, but sometimes they don't even own Bitcoin itself. What would you say to this new wave of commerce to Bitcoin about Bitcoin itself, and why and what are the unique properties that you think are important to take in mind or important to study very specifically to get to a deeper conviction on the asset that would go further than like a financial tradable instrument on capital markets? What would you say are the key properties? Of course, we know the limit of 21 million and so on, but what would you say are the key elements that maybe clicked for you or that you discussed in your series that would allow newcomers to fully understand the depth and the significance of the Bitcoin network overall, and what makes it special?
Well, first, one thing that I would say is that I can't remember who it was, but somebody along the way asked me the question, which I think is a very good question, which was, you're describing it as Bitcoin as money. Should I be thinking of it as money or as an investment? Because traditionally people don't think about money as an investment. And my response to it, and I think it's a good framework for people that might be either investing in the equity of Bitcoin treasury companies or investing in preferred stock or convertible debt or any security in the capital structure, is that the right way to fundamentally think about Bitcoin is as money, but it's also impossible not to think about it as an investment from day one. That part of the journey to Bitcoin is having some financial exposure to it, having that draw you in, paying greater attention to it, and being sucked down the rabbit hole. And that the rabbit hole is deep, and oftentimes people think that if they go down the rabbit hole, they won't come to be able to understand it. But that the greatest mistake is not endeavoring to do that, not endeavoring to go deep. And so that then beyond that, what I would say is, as an idea, I think everyone should be endeavoring to understand Bitcoin as money, which can really, again, only be experienced over time, or understood over time, and directly interacting with Bitcoin. That in that world, you need to develop an understanding of Bitcoin that's not predicated on anybody else's opinion. And that the only way to do that is, and this is the hardest thing I'd say about Bitcoin, is to develop your own individual framework from the bottom up of how Bitcoin is able to credibly enforce its fixed supply. It shouldn't be the first thing that you endeavor to do, because you need to understand why it is significant to then understand how it works. But the two both go hand in hand at the same time. But that at that final point, I would say, is if you can develop an understanding of how Bitcoin credibly enforces its fixed supply without need for trust, then from that point forward, you won't need to depend on anybody else's opinion of Bitcoin about what Bitcoin's price will be today, tomorrow, 4 years from now. You will understand why any individual would adopt it as money, and why any individual would adopt it as money is also the same reason that the next individual would be, and the next and the next. That is the destination point. That when that clicks, then you will start to see the world through a different lens, and it will be possible to see how in the future everything will be priced in Bitcoin, everything will be traded for Bitcoin. But also part of that process is owning some Bitcoin, or maybe first having exposure through a treasury company, but that there's a reason, and through that process, there's a reason why people can literally pay for things in Bitcoin today. And it might be nascent, and you might perceive it as niche, but there's also a reason why you can't go to the grocery store and buy treasuries despite the treasury market having existed for decades. And there's a reason why you can't show up and use Apple stock, and you can't use NVIDIA stock, but you can Bitcoin. You can't do it everywhere, but you can. And there's a reason why you can transfer it without counterparty risk, and that's not true of a security inherently, that the foundation of is, and for good reason, built on counterparty risk.
What do you think is the state of decentralization of Bitcoin, between the financialization and between the debates? It's a bit more advanced, but the debates of the core and knots and so on, and mining pools and so on. What do you think is really now the state of decentralization of Bitcoin?
The first thing I would say is that for anybody that is still maybe struggling to see the field of Bitcoin relative to all the other cryptos, it's to accept that decentralization is not trivial, and that it has been trivialized in the world of crypto and blockchain, and that if you looked at anything other than Bitcoin, including the second largest, quote, cryptocurrency, Ethereum is highly centralized. And the word decentralization is thrown around for Ethereum and all the other things, DeFi, decentralized finance, any other crypto. It's all with this faux idea that they are decentralized, and they aren't. They're massively centralized. Bitcoin, the only reason why it works is because of decentralization, and appreciating that word It's like, it's not decentralized because somebody says that it is, but it also only works because of that it is, and that Bitcoin is always decentralizing on average. There might be periods where the holdership marginally centralizes from a month ago or a year ago, but over time, as more people join the network, as more people demand Bitcoin, as more people mine, Bitcoin becomes increasingly decentralized, and as more actors, more participants control less of the network, it becomes harder and harder to change the rules of Bitcoin. And the most important rule of Bitcoin that everybody enforces against each other is the credibility of Bitcoin's fixed supply and Bitcoin being censorship resistant. That part and parcel to the credibility of Bitcoin's fixed supply is that nobody could censor the network, nobody could arbitrarily change the rules, nobody could arbitrarily create more of the currency. And so while it is true that over time Bitcoin decentralizes into to paint pictures of extremes, when Bitcoin was created and launched, there was only one person, and then Hal Finney joined and there were two, and then somebody else joined and there were three, and now there's millions, if not tens of millions. Now, over short periods of time, Bitcoin can go, say, from 2024 to 2025 to more large holders with Bitcoin treasury companies, and mining pools could have gone from more decentralized to less decentralized, but functionally over time, the economic incentives of the network cause decentralization. There still remains centralization risk, though, at all times, and that you can never know truly whether Bitcoin is sufficiently decentralized until a threat emerges. You can handicap things, and in my own view, based on my understanding of Bitcoin, I don't view any of the current levels of centralization, particularly in mining, as singularly an existential risk to Bitcoin, but they are risks. And that if people are complacent, that at some point in the future, those risks can materialize. Now, I don't think that it would be one existential thing happening, that it would more likely be death by 1,000 cuts. Changes, small changes that don't singularly disrupt or undermine the incentives of the network over time, causing that to occur. And so I think that, and again, it's naturally being, I'd say, dealt with by the market, where there is centralization in Bitcoin mining pools and there is centralization in Bitcoin mining hardware. But just in the last month, Square released a new hardware chip to compete with two of the largest players. What caused that? Economic incentives. There was a market to sell into with people that Bitcoin miners that have Bitcoin to pay, or fiat on their balance sheet to pay, and somebody went to the market to deliver a solution. Now it remains to be seen whether Square's mining solution will be broadly adopted, but there's an economic incentive dictating decentralization in that market. Then in the Bitcoin mining pool space, there is Ocean, and Ocean is still small, but it's delivering a different service to the market because there's value to be had. And it's delivering a pool service which, in my view, provides a better service to miners and aligns interests. And even though they're small, they're gaining hash rate. And so, again, they're more centralized than it needs to be. They don't present existential risk today, but they create the opportunity for progressive risk to potentially disrupt the network. And if efforts weren't be taken to decentralize Bitcoin at all layers at all times, then I'd be more concerned. But the economic incentives dictate, and I wouldn't store the vast majority of my wealth in Bitcoin if I was worried that those risks were existential. But at the same time, people cannot be complacent about it. That they have to take it upon themselves to build services, again, with their own self-interest in mind, but economic opportunities are created where points of centralization are presenting risk.
And in terms of financialization, it seems like at some point where the success of the BlackRock ETF happened, it seemed like it was like yes, we won, it's been adopted, and then the U.S. government said that this was the only asset that would not be a willingness for the U.S. government to sell, and they would not sell it, and so on. But and at the same time, you have massive flows into Bitcoin ETFs, and now just today, the fact that now 1 million of Bitcoin is now held by the threshold has been passed, that is now held by Bitcoin treasuries. What's your take on this increased adoption of Bitcoin by financial institutions and publicly listed companies? It looks inevitable, but what are your views on all of this with your finance background?
To me, all of this is good for Bitcoin. That it's it is inevitable that all large corporations own Bitcoin, all large financial institutions own Bitcoin, all governments hold Bitcoin in their general treasury accounts because it's the best form of money. That if, and I don't know if the stat is that the Bitcoin treasury companies hold 1 million Bitcoin and then the ETS also holds, so it's 2 million total. I think that might be probably, if you added up the Bitcoin treasury companies and added up the ETS, something like 2 million. Even if you accounted for 3 or 4 million Bitcoin being lost, what does that mean? That means that 19.9, let's just say 20, so 16 to 17 minus 2, 14 to 15 million are not owned by ETFs, the vast majority of all of them. And that if you were to go and look at the fiat system of how much, if you add it up, well, one, the banks functionally hold all the money, period. You have a liability of theirs. That Bitcoin is already by far the most decentralized form of money from an actual holdership perspective. It doesn't matter that MicroStrategy holds a lot of it. That if you look at the entire distribution, it is widely adopted. And if you think about this idea that there are 19.9 million Bitcoin in circulation, some of those are lost, but the reality is that those that are lost were lost long ago. Very little Bitcoin is lost on a year-to-year basis now that it has a high ascribed value to it, which is also logical. But if Bitcoin adoption were to increase by 10 times, and the current rate of inflation or the amount of Bitcoin that are in circulation is less than 1%, that's distribution. That the Bitcoin has to come from somewhere. It has to come from a current holder of the currency. And so, let's just say, to be honest, I'm a little bit surprised by the trend of the Bitcoin treasury companies. I'm also surprised that more, just as a phenomenon, I'd say, I'm surprised that more public companies like the Googles, Apples, Amazons of the world haven't figured it out to start shifting some of their, what I would call credit portfolios that are masquerading as cash, that more of them have not endeavored to do, just convert some of their treasury, but everyone's going to have to adopt it. And that in the end, that will drive, one of the chapters of my book and one of the articles in the Graduate Suddenly series is Bitcoin is the Great Definancialization, that Bitcoin will definancialize the economy. People will figure out that they don't need to own the government bonds or second homes for rental income they will be able to just hold a form of money that stores purchasing power, and through that process, they'll realize that the solution to their problem was not to outrun inflation; it was to adopt a form of money that didn't have inflation. So, if Bitcoin for a period of time is becoming increasingly financialized, it still is only on the margin, and as more and more people adopt it, more and more interests adopt it, that capital is ultimately being converted out of even more financialized instruments. And so, while I think at the end of the day, and this is what I do with my own Bitcoin, that it's better to hold it directly, that holding it through entities or holding it through custodians, that it's not one size fits all for people, and that if it accelerates Bitcoin adoption, then that is what is part of everything being good for Bitcoin. So the end game doesn't change because near-term trends. That the true fundamental that guides everything is people being able to hold a form of money that can't be printed, and that all the things that they've parked their money in to outpace the Fed's former target of 2% inflation or whatever your central bank has targeted, that Bitcoin's the only real thing that fixes it. And as people figure that out, there'll be less ETFs, there'll be less triple levered oiled ETFs, there'll be less bond ETFs, there'll be less bonds, there'll still be credit markets, there'll still be stock markets. It'll just be a much smaller fraction of the overall economic system, and the economic system will become far more stable because there's an incentive to actually save money when the money doesn't lose purchasing power.
So it seems like that could be a state where Bitcoin has been potentially in the suddenly part where Bitcoin is now the standard. In many ways, it's already the standard for many individuals and companies and so on. But what passionates you right now in Bitcoin? Is it the building the payments? Do you see anything else that is more exciting, or that you see is not discussed enough in terms of because of course, and I discuss every day Bitcoin treasury companies and how in some ways it leverages the finance, the traditional finance, to bring it to more power into the Bitcoin area for the economic power and the adoption it brings and so on. But what are the topics that you feel are not discussed enough in Bitcoin these days?
The first thing that I would say is that Bitcoin itself, like helping people understand Bitcoin and having people have that moment click for them, that still excites me the most. That having somebody figure out Bitcoin because it also helps them figure out their problem, and then the personal reward that comes from that, not from a financial perspective, but from a being able to navigate their lives and the world, that's still for me the number one, because still so few people understand Bitcoin. The second thing is Bitcoin payments. It's helping people understand that, because I do think that, and I'm using rough orders of magnitude, 99% of all the people who figured out Bitcoin to this point in time have done so because they read a book, consumed a podcast, paired some form of primary education with real world experiences. Hearing that Bitcoin is intended to fix the money and that it's a form of money that can't be printed, and then in 2020 seeing $5 trillion digitally created by the Federal Reserve over 2 years, like, figure out Bitcoin. But for what I would gather is the vast majority of people one of the hardest things for them to understand about Bitcoin when they hear that this hyper volatile asset that they think is a financial instrument is a better form of money, but that they can't pay for food or gas or their doctor or basic things that they need in their lives with Bitcoin, that as they see that occurring more in practice, that the vast majority of people will come to understand Bitcoin as money because they're seeing it used as money. That the lack of that and the lack of it and then the introduction of it is an education in itself. It will allow people to click. So one thing that I'm jacked up about is not just what we're building in Zaprite, but Square's working on Bitcoin payments, and the grocer down the store uses Square, and as soon as they have the ability, they're going to turn up Bitcoin purchases. And when I can, not only use it for myself, but when I can point to other people to say, like, you can go buy beef right down the street with Bitcoin, easy, that will be a tool to educate people. So that fires me up. And then the other thing, which I think is probably discussed the least, even though from an economic system perspective it's the largest, is mining and energy. I think that that Bitcoin stands to solve an energy problem, not as much as money, but it's a close second. That our energy systems themselves depend on good money, and so there's a derivative way that the energy systems need Bitcoin via sound money. But then the demand for energy and the nature of the demand to actually secure the Bitcoin network via the mining function, being a large flexible load for grids or to be off-take for natural gas conversion at well sites to be able to allow for more oil to be drilled, that the energy side of Bitcoin is going to be, I think, it should be increasingly on people's minds. And as the legacy oil and gas and power industries start to grok Bitcoin, that will be something that takes Bitcoin and Bitcoin mining to another level in terms of solving in a very direct way the complexities and problems of energy to drive down the price of power, which is a huge component to improving people's livelihoods and lowering cost of living, because everything derives from some base form of energy.
And what do you think, based on your experience with Zaprite, clicks the most when you explain Bitcoin payments with merchants, for example, or when adopting solutions? What, at the end of the day, is the ultimate argument that clicks for them?
Well, I wouldn't say so much. We don't really sell people on Bitcoin payments. I would say we target our products for people that understand Bitcoin, and then it's a matter of whether or not our products can meet their needs. And if they can't, if there's somebody else in the market that we can point them to, as an example, somebody like Square, that if we can't solve the problem, then we gladly point them to people who have a more tailored product. Because that's the other thing about Bitcoin payments. Each business is different, and that it's not going to be one company that provides a one-size-fits-all solution. There's different markets, different sub-markets. So I don't spend a lot of my time trying to convince people of why they should accept Bitcoin as payment. It's more, can this fit into your existing operations in a way that reduces friction rather than creates it? But it's kind of a similar degree of like when Bitcoin clicks for somebody, the satisfaction when somebody's set up and they're actually getting paid in the form of money that can't be printed, that there is something different about it. And it's hard to put your finger on, but buying Bitcoin with fiat and being paid for your good or service in Bitcoin It might be the end destination being the same, but you just got to experience it for yourself to know that, when I sell a book and I just get paid in Bitcoin, that I didn't have to think about the dollar price. I didn't have to actively hit the button to buy and to wonder whether I was getting. I was just able to accept money, and it's a good feeling. So being able to enable that for other people that have already figured out why Bitcoin stores value and why it is the better form of money is a very rewarding thing.
One of the best aspects for me when I discovered Bitcoin and understood the power of it is the peace of mind, actually. And in many ways as well, by using Bitcoin as payment, you would think that you would end up with less Bitcoin because you would spend Bitcoin. But actually, what I noticed with real world experiences is actually people that spend Bitcoin, they might end up with more Bitcoin on an individual basis, because typically they would do like a budget where they would say, I would spend that amount of fiat per month, and I would allocate that to a Bitcoin reserve dedicated to payments, and then they would not spend it all, and at the end of the year they would end up with extra Bitcoin that they wouldn't have had otherwise if they hadn't had this habit. And the next step, as you said, is like if you have a salary in Bitcoin, or if you have all of your purchases, or if you have Bitcoin denominated revenues directly, well, you might end up with more Bitcoin. And so that's quite interesting. And the question I would have for you is, when you understand Bitcoin and when you go on a Bitcoin standard, what are the superpowers that it gives you as an individual, as a business? What do you see as liberating in that aspect when you adopt Bitcoin and you are able to not anymore feel the volatility of Bitcoin, and instead you see the price movements as the actual volatility of fiat and not the volatility of Bitcoin? What, in your experience, what has been the most liberating things, and what do you see?
Yeah, for me, it's what the word that you mentioned, which was peace of mind, is that one analogy that I would use is that if you can save Bitcoin for long enough, and part of that is dependent on going deep down the Bitcoin rabbit hole and developing your own personal understanding of how the Bitcoin network works, why it's able to enforce its fixed supply without any central coordination, and how that hardens as more people adopt it. That one analogy would be like if you whether you've surfed or ever watched people surf, that often beginner, and I'm someone who considers myself a very novice surfer, but when you're trying to get outside the break and you're new, the waves are just crashing on you, and you expend the vast majority of your energy just trying to get outside of the break. But then once you're outside the break, you can relax, and then you look back and you see everybody else trying to get outside the break and the waves crashing on them, and then you're not expending a lot of energy. That once you have a combination of enough time having passed, enough knowledge, enough savings in Bitcoin, and you understand why more people are adopting it and why it stores value, that it allows you to not think about money as much day to day. It allows you to not have to focus on outrunning the bills. Like, there's still pain in fiat inflation and things costing more, but you're not constantly, like, when your money is losing value, you constantly have to think about getting more of it. When your money's not losing value, you can actually shift your mental energy to other things. you know, and that's where I think about, like, when you don't have to think of, it's this weird dichotomy where when you don't have to think about money as much, you can think about creating value more, and you can think about how you actually want to spend your time, and that you can be confident that whatever it is you're doing it because you actually wanted to be doing it, not to pay the bills, and that's where the peace of mind comes in. And so I do, um, I've shared that, myself, and then what that's allowed me to do is work on things that are long-term oriented. And what you were talking about of working on Bitcoin payments, I know that it's super early to Bitcoin payments. We're early to Bitcoin, which means that we're by definition earlier to Bitcoin payments. But I also know why the entire world is going to need these products. Now, whether I'm able to deliver the solutions that ultimately end up being adopted, that's execution risk. But when you actually go through and pay somebody a Bitcoin or receive Bitcoin payments, that is part of the education about what Bitcoin is. And it connects the loop of why everyone's going to adopt it as money. So it's a primary form of education that allows you to store more of your wealth in Bitcoin because you have a greater understanding. You see the future more directly because you've experienced it. And that also through that process, you can, if you have places that will actually accept Bitcoin, the more places that do, you can technically have more in Bitcoin because you don't have to get back into fiat as much. So it's like, you might allocate more to Bitcoin because your knowledge of it is greater because you're actually going and spending it, and then you start to observe more places that are accepting it, and so rather than having 10% of your money in Bitcoin and 90% in fiat, you might have 50%. And so it's like, every time I'm spending some Bitcoin, it's some small fraction of my overall Bitcoin, and I'm out there working to create value. And if I do, then I'm going to get more Bitcoin. So it all fits together.
Do you have any final word for? At the end of the day, it's also a session that I'm doing for Capital B shareholders to get up to speed with Bitcoin itself and the whole world of Bitcoin adoption, beyond as well the Bitcoin treasury company. I know many shareholders are also in Bitcoin treasury companies because they want to achieve that peace of mind by at the end of the day potentially outperforming Bitcoin, and but fully based on the Bitcoin standard, and with the aim of at the end having more Bitcoin and more peace of mind. What would you say to investors that maybe are scared by short-term Bitcoin price movements, or don't know what will happen in the future? What would be your words for Capital B shareholders?
I would say to consume as much information as you can. I'd recommend the Bitcoin Standard for sure. My book as well, Gradually Then Suddenly. It's only available on the safehouse.com, which is Safe Dean Amusa's website, who the author of the Bitcoin Standard. So, certainly continuing to read and listen to podcasts. And then, what I would recommend just as an exercise is getting a Bitcoin hardware wallet and sending some small amount of Bitcoin to it. That using Bitcoin is part of the education, and it's applied education. It will teach you about how the Bitcoin network works, and if you have the opportunity to buy something for Bitcoin, that to do it, because that too is part of an education. Worry less about your tax consequences and do it for furthering your own understanding of the way that Bitcoin works, because there are things that you can't understand about Bitcoin if you don't do that. There's a whole part of the plumbing, and it's not just like how it works. You won't be able to think about Bitcoin without the firsthand knowledge of using it directly. So I'd say that, and then again, what I generally tell people is, yeah, if you don't understand why Bitcoin will store value, like if the idea of Bitcoin as money has not become intuitive to you, then continue to consume primary education, but part of that is using it. If you are one of those people, then I highly encourage you and you are running a business or a key employee in a business, to encourage that business to accept Bitcoin payments, because um, that is the end game of this, and it's important for high agency people to take on the leadership, but it also will benefit your businesses not to do it altruistically. It delivers value in more ways than one. So if you don't understand why Bitcoin stores value, read a book, listen to podcasts. If you do, figure out a way to accept it as payment. And then the third thing would be, if people are interested in the energy side, I have started a new podcast that's part of TFTC and Marty Bent's media platform. And it's in the TFTC feed. If you go to a Apple Podcast or Spotify, my episodes are called Center of Hash. They're exclusively focused on the intersections of Bitcoin mining and energy. And so that fascinates me. But so check out those episodes, and then if you're interested in Bitcoin payments, check us out at zaprite.com, zaprite.com. We're not the only people working on Bitcoin payments, but we'd love to help you out, and if we can't, then somebody else can do it better. We'll point you in that direction. So those
Perfect.
would be my recommendations.
I would indeed highly encourage to look at your book, Gradually Then Suddenly. It has helped me significantly, and I know many other people. So thank you so much for all of your work, and good luck with Zaprite and with the deep dives on mining. I've listened to the one with Pierre recently, so it was a great one as well. Thank you so much, Parker, and take care. Talk soon.
All right, thank you. Thank
Thank
you
you.
for having me on.
Thank you. Cheers.